Hey friends, thanks for joining me, Jim Baroud, to hear a few insights from leaders who represent our innovation ecosystem. Today's chat is with Steve Socolof, Managing Partner of Tech Council Ventures, and Daniella Kranjac, Managing Director of Dynamic Capital.
Daniella, why don't you start ladies first, and then we'll go to Steve. Tell us about your entrepreneurial background and your investment experience as of today.
Sure, happy to. Thanks so much for the invitation, Jim. I so appreciate being here and together with Steve and his depth of experience in the space. My background, I'm a chemical engineer who ran quickly to the dark side and to business development and sales and general management in my career. Had the good fortune to be an entrepreneur really early in my career, basically during my senior year at Stevens Institute here in Hoboken. And early on, just sort of caught the entrepreneurial bug. I guess from that perspective, was part of a great growth story, actually in the state of New Jersey, Wave Biotech, grew that company up and then exited that to GE Healthcare, which is now actually part of the Danaher Cytiva business. And went on to take a number of different roles in commercial leadership and operations, but really kept finding that there was a gap in the funding landscape, specifically for life science industrials. Most folks don't really know what life science industrials were until about a year and a half ago. So now that everybody is keenly aware of vaccines and the benefits that they provide, life science industrials are basically the core critical fundamental technologies that biotech and pharma rely on for discovery, for development, for manufacturing. And so my entrance or my initiation as an investor is kind of circuitous, coming from an entrepreneurial background, an operating background, and then deciding to establish Dynamic Capital about 3 or 4 years ago and getting underway with our first fund.
Great, thanks, Daniella. Steve, go ahead.
I grew up through mostly corporate innovation. I got a degree in math and computer science at Stanford. So back in the sort of early days of the Silicon Valley. And I spent about 15 years in a couple different consulting firms working on problems of corporate innovation and R&D productivity. And that led to me being recruited by Lucent Technologies, which brought me back to New Jersey. I was actually born in New Jersey. And Lucent brought me back here to create a venture incubator for Bell Labs. Just after Lucent was formed out of AT&T. So there was a tremendous amount of technology there. Lucent was really interested in venture style commercialization. And so we established an incubator for the labs. And over about 5 years, we created about 35 companies out of Bell Labs. So exciting times across a number of different technologies. And then along came the dot-com blow up and telecom downturn in 2000. And so we actually took our team and our portfolio out of Lucent, basically acquired it with backing of some LPs, limited partners, and launched a standalone fund focused on commercializing technology out of corporate labs. So I spent the next 15 years running all around the US and Europe, partnering with corporates on innovations created internally in their labs or nascent businesses that they didn't see a fit for internally and thought they'd be served better as standalone businesses. And so we would do spin investment, we'd basically stand up and invest in spin out ventures. So I did about 80 of those over the next 15 years, all across the US and Europe. And that brought me to a few years ago where my partners retired in that fund, and I was thinking about what to do next. And I recognize that there's been tremendous amount of change in the venture landscape over the years. One of the big changes being that venture is happening everywhere now. It's not just in the Silicon Valley and Boston and other more traditional venture-based geographies. Recognize that the Mid-Atlantic region now represents about 20 to 25% of the US venture market. So I don't have to travel to find great entrepreneurs and opportunities. And there's a tremendous industrial base here locally that is interested in entrepreneurs and innovators and startups. 15, 20 years ago, it was a group of companies on the West Coast and, the tech industry primarily. And now I'd say almost every large company is, very interested in new innovative ideas and working with entrepreneurs and startups. We have a tremendous industrial base here. So I didn't see a reason to have to travel any longer to find great investment opportunities. And timing worked out well that the fund I joined, Tech Council Ventures, had a successful first fund, was just beginning to raise a second fund. And the fund was associated with Tech United, which was the association for the technology industry in New Jersey, and represented about 1,000 different corporate and university members. And so it just all added up to a great opportunity for the kind of innovators I was looking for, and the partnership with corporations in developing those innovators.
Great. Thanks, Steve. So bring us to the current day here. We just have gone through a year and a half since the pandemic started. As you mentioned, Daniella, you've been in sort of a sweet spot, but I think, the need to travel, as Steve just referenced, is sort of gone away in many ways, right? At least for the past year and a half. And so where do we see the state of the entrepreneurial community from your perspective?
Yeah, I'm happy to take a stab at it and maybe speak more specifically. Again, I'm really niche. We're focused entirely on life sciences and that sector. So, if it pertains to tech or fintech or something outside of it, I'm sure Steve is more more skilled at speaking to that. But in life sciences, I think a couple of observations. Certainly, with the start of the pandemic, we saw a couple of different sort of manifestations, right? There were your companies that really were sort of caught in between. Maybe they were planning on raising their next round, and COVID sort of upended that for them. That led to a lot of bridge rounds, a lot of smaller sort of bridging positions that became opportunistic in 2020. But as 2020 went on, I think we saw a pretty strong return. Certainly in life sciences, we didn't see a slowdown at all. In fact, we were doing deals with folks and really doing all of the diligence and all of the requisite work before actually closing the deal without meeting folks, all via Zoom. I will say one of our last sort of requirements before closing a deal is to be in person, and we were managing to actually make that work and do that for a lot of those deals at the end of 2020. But certainly those dynamics were pretty different for people and getting used to kind of a new norm. I think it did also open up certainly opportunity sets because they were able to see a lot more investors via Zoom and sort of test their concepts out, maybe even socialize around the opportunity set before they were ready to go to market. So that's a little bit of what we've seen. But I think from my general perspective, it's really a great time to be an entrepreneur. It's a great time to start a company. Certainly within life sciences, it's a strong sector. We don't see that slowing down anytime soon. Although, I'll say funding availability is definitely there. There's a strong appetite for investment in life sciences. In fact, if we're looking at some of the stats from 2020 compared to 2021 year to date, we're on pace already to surpass total funding for 2020. And 2020 was actually a record year in life science industrials. So it's extraordinarily strong. It's an incredible time to be in the space. I think if you look more globally, though, Europe is a little bit more challenging, and certainly other regions and other geographies. But Europe always has this sort of different dynamic with venture. It does not have the venture ecosystem that we have here in the States. There's a lot of challenges for funding, sophistication, not just of the investor base, but also to some degree of the entrepreneurs who have just not seen or not been aware of how it works, for example, here, and the accessibility to funding and so forth. So that is a little bit different for us. It actually creates a great opportunity because we do see plenty of opportunities in Europe, and I think from a valuation point of view, it's still certainly attractive there as well as here. But I'm sure we'll dive into that a little bit more.
Sounds good. Thanks, Daniela. All right, Steve, what about from your perspective?
Yeah, I echo a lot of what Daniela said. These times, the last year and a half have been tough and trying times for a lot of people, for issues of health and safety and livelihood and all of that. But it's also just created a tremendous moment for innovators. So all the challenges that we face, whether they be in healthcare, but a lot of the, we're educating, online, we're working online, we're, doing our banking online. So all of these challenges presented tremendous opportunities for, as I said, for innovators. And really, I think most people see that we've kind of accelerated in many ways trends that were already nascent, but really accelerated through the last year and a half. As Daniela said, I think people generally hit the pause button in Q2 of last year when COVID first hit. So investors held back, entrepreneurs were holding back a little bit on spend, customers were holding back. So there was definitely a slowdown there, but it came roaring back in Q3. And again, as Daniela said, 2020 was a record year for investing. I think there was enough government support, everything from the Federal Reserve and the financial system down to in the banking system, down to the PPP loans and other state and local support. So entrepreneurs found themselves pretty well supported, and investors kind of got back into action, figuring out how to invest without being able to spend as much time in person with entrepreneurs. For me, I'd say I found it this last year and a half to be one of the most efficient times or productive times in my investing life. I got back hours a day of commute time and kind of time in between meetings. And, I sat at home on Zoom from, 8 a.m. to 8 p.m. And not only did I get to spend more time with entrepreneurs that way, but I found it a much more productive way to do due diligence, because to try to reach people or have experts in my network or corporate partners in my network talk to entrepreneurs, that might have been very hard to schedule when people are traveling. But when everyone's sitting at home on Zoom, I could put a Zoom meeting together and have great introductions and due diligence or support business development. So that worked really well. And it's true that, as Daniela said, we had some things in the pipeline where we'd spent time in person before we got into COVID, and we kind of followed through. But 6 months later, when I've been talking to someone on Zoom for 6 months, I'd forgotten the fact that I'd never met them in person. So we ended up doing a couple of deals where we actually never met the entrepreneurs in person. And it's really been every sector, fintech, crypto, IT, security, every sector seen tremendous growth of investment and entrepreneurship. And, and I think a lot of states and regions, municipalities, and this has been a couple years in the coming, but I think it's, maybe also accelerated in the last year and a half, has really seen the entrepreneurial economy as a driver of economic growth. And so there's been a lot more support at the state level and municipal level for startups than there used to be. So that's really helped.
And well, let's speak to that. And just a reminder for everyone on this Zoom chat, you can submit your questions. I'll take them in about 15 minutes, and we'll ask Danielle and Steve those questions. So regarding the local environment, clearly there was some good news this week with Sean O'Sullivan's SOSV and Hacks announcing an accelerator in Newark for hardware, and then they also have IndieBio in the city, Penn Station, or in that area. That's all good news, right? How do you guys see that that announcement as far as justification and sort of how does that portend for the future?
I think it'll be interesting what Daniela says about the sectors he focused on, but I'd say generally there's been a tremendous growth of accelerators, incubators, kind of out of style now as a term, but accelerators and venture studios and other organizations that are trying to create and nurture very early stage startups. I think that's a sign of the innovation that's going on and the interests of both. I mean, a lot of these have some government support or university support. So the interest in nurturing, early stage venture among those folks. And there's also, we might talk some more about this, but there's just been a tremendous increase in, people call it either crossover investors or non-traditional investors coming into the venture market. So around the accelerators and incubators, a lot of family offices, a lot of high net worths, sort of a growing number of very early stage, they call them pre-seed now, in front of seed investors. So I think those are all great signs of, the support for this kind of early innovation that Hacks and SOSV represent. And I think in those announcements, you also see the tremendous support that they got from the state, and what the state's trying to do here to nurture innovators and provide support.
Great. Daniela?
Yeah, I mean, I'd agree. It's an important part of the ecosystem. I think for our specific sector or subsector, if you will, it's pretty niche. And so what we find is that most of the entrepreneurs in life science industrials, for example, are funded by friends and colleagues and peers and possibly, sort of smaller angels that they know to get underway for that pre-seed. At least historically, there's been a pretty significant funding gap in our space, which is changing now, which is great. But those accelerators, incubators, what have you, they certainly serve an important purpose. I think sometimes sometimes it's important to think as an entrepreneur, what are you looking to raise? What are you looking to get out of your raise? And essentially, are you looking for that level of support? Is that really support? Is it going to be more cumbersome for you going down the line? And we've seen, I guess we've seen a mix of great accelerators, incubators, and maybe some that maybe fall a little shy of expectations. So no comment as to SOSV, and I'm sure that they'll make it a great system for those entrepreneurs, but sometimes those can be pretty cumbersome. And it just really depends on what you're looking for as an entrepreneur. Are you looking for the support? Are you looking for just capital, just a check to get you underway? Are you looking for a really knowledgeable investor in your sector? And I think for us, we're often making our case as a differentiated investor, right? We're the smart money. We know the space, we know the strategics, and I think Steve's got kind of a similar slant to that as well. But that's an important distinction for entrepreneurs to make.
Yeah, I mean, I think those are all great parts of the ecosystem. I mean, our model is we're a small partnership in terms of people. We put a lot of time and energy and bring our network to help the companies that we work with. So we're not spreading our fund across lots and lots of deals in small increments. We're trying to pick, a few companies that we're really excited about and we really want to work with and help support. So we pay attention to all these accelerators and incubators, and we see some great things coming out of them. But for a demo day of 15 or 20 companies, we might follow up on a few, and maybe one gets an investment. So
sure. So let's go back, Steve, to what you mentioned about the use of Zoom, right? So obviously very productive, a lot of people on Zoom, equalization in many ways. But going forward, how do both of you see sort of that that structure easing, or are they still going to meet with entrepreneurs in person if you can, or what's the mix? We're going to a hybrid, obviously, everything's going hybrid, right? So what do you think it'll look like, let's just say 1 year from now? Hopefully, let's assume COVID is pretty much behind us. We're free to meet with anyone we want without terrible fear. What do you think will be the mix of virtual and in-person interactions?
yeah, I think it's going to depend a lot on the leadership and culture of the companies that are out there, speaking generally. I think for us, we're a very small team. We know each other well. We were already spending a lot of our time on the road out visiting with entrepreneurs. So we got out of our office at the beginning of COVID. I don't think we will have a physical office again. It works well for us to be, based in our homes and on Zoom from that perspective. But, we are starting to meet people informally. We tend to meet in coffee shops or restaurants rather than offices. But we may get back to that, more over the next year. Certainly, I see a lot of companies trying to figure out, what the right mix is, and thinking about hybrid and what's the right hybrid. And the last thing I'll comment on is I do see, I guess this is where sort of the biggest question on my mind is I do see entrepreneurial teams that have gone pretty, everybody's in their own location. And there was a little bit of that, going on for years, but now there's startup teams where nobody's in the same location. And a startup situation where you have a small team, you're really trying to find your way, you're working hard together to figure things out. Everybody's kind of doing, sharing jobs. I do see challenges in that. So I do kind of spend a little time thinking about, when I look at entrepreneurial teams, is there enough co-location, enough togetherness to think they're really going to work well as a team versus kind of being very dispersed in their location.
Good insights. Daniella?
Yeah, agree wholeheartedly with Steve's assessment. I think we've seen, we often see entrepreneurs and teams that sometimes are dispersed and geographically spread out, and on top of it, maybe they haven't worked together very long, and so that's usually a red flag for us because it's really hard to be in that kind of environment and iterating on a technology, a business model, how to really go to market, and you're all spread out and haven't been really together for any period of time. So I think sometimes you can apply a caveat and say, well, if they've worked together, in their former life, but now they're geographically dispersed, they probably have a good enough relationship that they've built up, and that can bring to bear on this opportunity. But it's usually a flag for us. In terms of just thinking about Zoom and the balance of in-person, certainly for us, we like and we use and leverage the video conferencing as much as possible. There's no substitute to being in person, and so we really have recognized that. But I think it's making us, as Steve said, a lot more efficient, right? Because we can do the initial introductory meeting, we can make the assessment, we can do even early due diligence and get to the point where we're comfortable around the team and the technology, and then sort of move to meet in person. For us, actually, this week marks a pretty big milestone. It's our team is in Boston for a pretty substantial life sciences conference that's quasi virtual and quasi digital. It's a little bit frustrating that it's a mix, but that's kind of marking the first major conference in our sector, and we're hoping obviously all the COVID protocols are being honored and so forth, but it's an important sort of back to somewhat a norm for us. But I think certainly we'll make use of Zoom. It's great to be able to meet people virtually and just get a sense, well, does this fit our investment thesis? Does the opportunity fit our strategy? Is it too early for us? Is it the right time? And then we can always sort of dive in more in person. But I see a return to that, and hoping for a consistent return to that.
Yeah, amen. So what about in your investment outlooks for the rest of the year and then next year? Are you confident it's going to be at a sustained high level, or do you see bumps ahead? I know this is crystal ballish, but what are you guys seeing going forward?
Yeah, I mean, I guess the biggest concern we have, I mean, generally, innovations, moving along great. Corporates are really interested. I think as we get to the sort of winding down or moving past, or whatever you want to call it, with the pandemic, I think we'll see a more robust economy in general. So that all bodes well. And then on the other side of it, you see it with the public stock market to begin with, and it flows down to venture. Valuations have, a lot of money's come into the market, and valuations have really increased. And so we are trying to be value buyers as much as you can be in this market. It's tough to do that in this market. You look at the stock market today, you don't know when there's going to be a little crack that, might send us into a little bit of a longer slowdown period. But certainly the momentum's been tremendous, and it's tough to go against it right now.
Daniella, how do you see things domestically and globally?
Yeah, and I think I would also echo what Steve said. When I started thinking about the topics for today, valuations is a key concern, right? And I think it's hope for the best, prepare for the worst. A little bit from an investor point of view, we are certainly observing those valuations more so in the domestic market, and more so obviously in the public markets, translating to actually higher multiples on exits, which is great directionally for investors like ourselves, and for the entrepreneurs too, as long as that translates into a great exit for those seeking one. I think the concern, and it's a natural concern, and just cause for being aware that there could be a constriction that happens down the road, and we don't have a crystal ball. We don't know when that might be, but certainly both Steve and I have a number of years experience in writing through those scenarios, and how that translates into the industries that we invest in. So while we could expect a contraction, for example, in the coming years, both on the multiple front and on the valuation front, I think honestly, and when we look to specifically our sector in life science industrials, there still is a very, very strong appetite and an investment case to be made for the sector. We see the strength of certainly the strength of the strategics has never been so high as it is today. But even pre-COVID, it was a healthy market. It's a very robust sector, and that translates into value oftentimes. So I think even if we do see a contraction, it would be short-lived. There would be a return to some reasonable state of multiple, not today's multiples, but we would certainly see that in the long run. So I think we're just being very rigorous and sort of controlled about the investments that we make. And if we are looking at that might, that might not pass the red face test and say, wow, this is a strong valuation, and maybe it's not called for. But equally so, there's a ton of companies out there that are doing really groundbreaking innovation in our space, and rewarded with I think great valuations and great rounds, and investors that are leading those rounds and really committed to them.
Yeah, I'll just add two more themes in that mix. One on the positive side, as I said earlier, there's just been tremendous momentum in general. But, from a technology point of view, the advances in cloud computing, in data analytics and artificial intelligence, technologies for automation, IoT, there's just a tremendous amount of change happening in every sector, driven by all those technologies. So we're going to ride that for quite some time, I think, on the positive side. And then the other comment, which is a little bit orthogonal, but one thing that's been really interesting the last couple of years is for a few decades, exits generally in the venture market were kind of 80% M&A, 20% IPO. And the last couple of years, that's been flipped. And exits have been about 80% IPO and 20% M&A. So on the IPO side, the very healthy stock market, as well as what happened with SPACs, drove a lot of that. So it'll be very interesting to watch what happens in the public markets over the next few years. And then in the private markets, these big companies, as Daniella was saying, are still very healthy and growing and looking for continuing drivers of growth. But there's also, regulatory issues around antitrust, around foreign influence, and other things that could impede the M&A side. So there's definitely things there that were a little risk on the exit side in the future, I think.
Right. What about for entrepreneurs who are listening in? What are you recommending to them in general?
I think in the early days, there's a ton of money going at later stage companies once you're starting to show some ramp. But for the early stage companies, be lean and mean and be very focused on creating your early traction and show a little bit of early momentum and raise money that, you can point to exactly what milestones you're out to achieve with that money. So I think that clear focus early on. And then later you get to those B, C, D rounds where you're ramping and you're showing growth and you're going to attract a lot of capital.
Got it. So you would that's the advice is the same wherever we are, is what you're saying right now. Even though there's a lot of money, still have your ducks in order, prepare properly, and still be lean and mean. Right?
Well,
no rush.
I think in the early stages, there's a lot of lookers. But, people want to see traction, and it's going to be tough to raise if, you're going to want to bootstrap or find friends and family, find ways to show that early traction that will attract later money that will support growth. So I think even though we're seeing a lot of money going into later stage and buying into, the growth and momentum in the market right now, at an early stage, you still have to prove yourself, and people are, using some stronger filters around that early, in the early days.
Got it.
And also there's just, you sort of have to work a little harder to stand out from the noise because there's so many accelerators, venture fairs, venture studios. And frankly, with Zoom, I could watch 2 or 3 demo days a day and kind of try to figure out, which of a few companies I want to follow up on out of the 50 or 60 I might look at in a week.
Got it. Daniella?
I agree with Steve. I think another consideration for entrepreneurs is really preparation. And preparation means a lot of things from a lot of angles. I would say, from your own business perspective, spend less time on the pitch, spend more time making a great business. And that'll really translate very readily to people like Steve and myself. When you've got the answers of the questions you've thought through, or at least those are things that you've thought about. You may not have the answers, but you've given it thought. That shows in spades, and it doesn't necessarily, need to be a very slick kind of pitch, right? So that's important. The preparation as well, I think, goes to knowing the investor that you're talking to, right? So the initial call, you may not have the full background on what Steve does or what we do at Dynamic, but understanding the types of deals that we do, the sweet spot for us, getting an understanding that really helps a lot, because then you as an entrepreneur, you're not wasting your time with folks that maybe this would be too early for them, or they just don't do seed or pre-seed, and they just don't do that sort of investing, right? It's not in their thesis. So don't take that personally. It's just part of their thesis that they've come up with, and they're not going to make an exception usually, right? So it would have to be really really key. So I think doing that work, and then maybe to the point that I mentioned earlier about understanding what you want out of your investor base. What type of investor are you looking to secure? Are you looking just for a check and somebody who's going to stay on for the most part? Are you looking for someone who is really engaged and hands-on and supportive in terms of network, as Steve mentioned? Are you looking for really someone who's going to be part of your growth story and get more heavily involved? So I think that understanding of yourself, that self-awareness as well, yourself, your partners, just to understand what you're looking for is really key.
Great. So before we get to questions, I just want to ask one question to both of you. One takeaway from this conversation for entrepreneurs, as they're, one thing, as Steve mentioned, there's a lot of M&A going on, right? So they can go in two directions, either M&A or raise more capital. So for those entrepreneurs who are fortunate enough to have those options, with acquirers coming into the fold, what one thing do you think they should consider as they think about which direction to take?
Well, I'd say there's a few entrepreneurs that build things for other people, thinking M&A in mind. But I think most entrepreneurs, want to change the world in some way and want to build a big standalone successful company. So, have a big vision and go after it.
Great, thank you, Daniella.
Yeah, maybe I'll just be devil's advocate there. I think don't close yourself off to a great opportunity. You want to change the world, and you by right, you're on your way to doing it. M&A can be a really attractive exit and can allow you to go and do other things. You may have other things that you want to work on beyond what you're doing. So. I would just say keep an open mind, but also maybe do the soul searching of what your ideal is, and have that a little bit in mind. It does take a different level of team experience in order to make for a successful IPO, and so it's a markedly different path, and you kind of have to get your ducks in a row to go that path. Whereas M&A, a little easier, a little bit more attainable, if you will, and especially if you've got a product that's in demand in the market customers.
Thanks, Danielle. Well, and let's just while we wait for questions, let's dive into that. You sold your company, so if an offer comes from a big company like GE or someone else, what should an entrepreneur do? What would be sort of the three things they should do next?
Wow. So presumably,
Tell they're bored.
What's that, Steve?
Tell they're bored.
Yeah. Presumably, you will have a relationship. It's usually not coming unsolicited, right? So presumably you will have had a relationship, and the board is kind of aware this was coming. So yeah, alert the board. Definitely. And I think that's maybe a key, it's maybe actually worth spending a little time on that one because entrepreneurs, I think sometimes, depending on experience and depending on what they've done before, sometimes feel like the board is the last to know. It's really important that the board is there to be, your source of guidance and can be a wealth of knowledge, particularly if you have board members who are in the space, in the sector, know the transaction multiples of what's going on in the sector. So I think, ultimately, if you're even entertaining those conversations, you should definitely have a network of bankers or transactional M&A specialists that you can call on and understand, where is the sector and where are the multiples today and what are the transactions, and keep an eye on those because, you could get something and you don't want to comment on what is in front of you, what's been handed to you, without knowing, really where you stand. So do the homework, have that back of mind. I think you really have to also understand the risk versus reward. So depending on the offer and where that comes in and where, what it means for yourself, what it means for investors, what it means for your employees and your team. Is it compelling? Does it take a lot of risk off the table for you? Or is it premature and you really should be growing to the next milestone before considering that exit? But presumably, you should be having those conversations with your board on an active basis.
Got it. Steve, you can touch on that if you want.
Yeah, I would just say, sometimes these things, first of all, it's tremendous that you attracted an offer for something that you built. So that's a little celebration is worthwhile and deserved. But sometimes it's, that offer is unsolicited and it sort of comes in over the transom and, that's sort of puts you down one train of thought. And sometimes you're out looking for an offer and you're out talking to people and, that sort of takes you down a different sort of process and path. Certainly, as venture investors, we're looking for big returns, and we don't want to sell too early, which are mistakes people sometimes make. And people also make mistakes trying to sell too late and passing over good offers. So mistakes have been made on both sides of that. So there's a pretty, full discussion and thought process around, is this the right time? And, that's about value, about where you think you're going on your own, about team and team needs. I will say that these days, relative to the past, venture investors are much more open to supporting entrepreneurs in growing bigger successes in terms of, finding ways to let them take some cash off the table on the way so that entrepreneurs aren't selling too early because, they want to put some, that first, cash in their pockets. So I think there's, certainly motivation to, go for the sort of the gold ring. And then, then you got to figure out, what's the right time. And then there's lots to think about the tactics of negotiation and terms and, holdbacks and all kinds of things in deals that, use your board, get yourself good counsel, maybe use a banker to sort of think through and work the process.
While we're on this topic, Steve, what's your gut say about SPACs? Are they here to stay or their time has passed? Or how do you see SPACs going forward?
I think they're here to stay in some respects. And I think we've been through a hype cycle. So I guess the answer is both.
So, Steve, what are your thoughts on the current and future valuations of tech companies?
Well, like we've talked about a couple of times here, I think valuations are high. They've sort of never been higher. And, but, if you're a technical trader, the momentum's really favorable right now. And for reasons we talked about in terms of sector and technologies and opening up economies, there's plenty of fundamental reasons to be optimistic. So we're all a little bit nervous about valuations at this point, but I think the optimism and positive indicators are still pretty strong.
And Daniela, you think the same thing in your industry? Is that right? Is that what I heard you before say?
Yeah, certainly from a valuation perspective, trending certainly high at the moment in terms of exits and IPOs. Also M&A, it's definitely on the higher end. If you look back a couple of decades, it's definitely its highest point. At the same time, it hasn't completely translated into venture rounds yet. We're definitely seeing that, I think, in terms of some of the later stage or the larger rounds, but for the most part, the Series A, Series B, even seed rounds are high but not astronomical. So has not converted entirely into those venture rounds, but we are cognizant of that and sensitive to it.
Thank you. Here's another question about Theranos. What do you guys think about the Theranos saga and Elizabeth Holmes? How did this happen? You can both take it. You can take it, Daniela, from a life sciences. Steve, you can take it from your Silicon Valley background.
Yeah, I think, well, a few things. I mean, first of all, to give Elizabeth some credit, every entrepreneur sort of lives on this line of, promise versus, delivery. And so, they were promising some big things that they didn't deliver in the end. We'll let the courts decide whether, there was some fraud in there or she was just, out of ahead of her headlights a little bit. So it's hard to say. But the other thing I'd say is certainly in, by whatever force of personality and ability to tell a great story and, strength of the mission, she attracted a lot of money from people who weren't really experts in what they were doing. So she didn't have any really hardcore life science investors in her or medical device investors in her deal. She had a lot of people that were sort of non-traditional or crossover investors. She didn't have any corporate strategics in Theranos. So the smart money wasn't in that deal. It was, money that was coming from people that were attracted by the story and the personality and all of that. So, it's a good sort of warning to, others that follow in that sense.
Got it. Daniela?
I would definitely agree with that. I think on her board, she did not have any representation there. Although I believe Theranos did have one peripheral strategic, if you will, sort of involved, and that ultimately, I think it, look, it's an example of maybe hubris, maybe too much self-confidence and pride. I think it was a real, a real shame, because I think the concept and, the idea of what they were trying to do was incredible and really, really could have changed the industry. I think it also served a really big disservice to life sciences too, in that, we do see other opportunities that are sort of Theranos-ish, right, in terms of what they're looking to provide or supply, or the innovation that they're trying to bring. And you're always now really thinking twice about and doing additional level of diligence on those performance criteria and what people are showing you. I think that this, if you've read Bad Blood, the example of the test that was run and the shenanigans allegedly that were the test results were sort of manipulated and presented on screen, just really really terrible. And it really it drives a stake into life sciences. And so I agree wholeheartedly with Steve and the need for technical expertise and depth, and people that surrounding yourself with people who are gonna challenge you and not just agree and go along for the ride. I think that's a great example for entrepreneurs to really build yourself a board of directors, a personal board of directors even, that is going to challenge you and give you guidance and tell you when you're wrong and tell you when to think twice, and really just ensure that you have that challenge, because it can be I guess easy to fall into that trap, but it's still upsetting.
The one other comment I'll make about Theranos is I have watched and been involved with the development of the corporate venture ecosystem over the last 20 years, and it's really grown tremendously. Most, if not almost all large companies do some direct venture investing and have venture arms. And Theranos, as I observed it, was one of the steps along the way that shifted the relationship in between the corporates and the VCs, the traditional financial VCs, because the corporates, a lot of them took it as with a view that that the VCs didn't bring the appropriate diligence and insight to that deal that the corporates would have had they been involved. So I think it was very interesting. It was sort of noted that way by a lot of corporates I've talked to. And I'll just say to entrepreneurs, there is such a strength now in the corporate venture ecosystem. Definitely there's a little bit of a two-edged sword to partnering with corporates, but I'm a big believer in the value that they can bring in the right kind of partnership as investors. So if you've got a proposition that you think is of value to a corporate investor, definitely worth chasing.
Yeah, no, those are great insights. And I'll just highlight one of the comments Daniella made, to have a separate personal board in addition to your formal board of directors. That's really important to give advice to entrepreneurs, particularly as they face these obstacles as they grow their companies. Anyway, this has been a great conversation. I want to thank Daniella. I want to thank Steve. This has been really great. Thanks for coming on today and sharing your insights. Thanks for joining us. I hope you enjoyed the show. Please like it, leave a review, and subscribe. See you soon.